Hey there, welcome to our channel. Today we're tackling the global banking system, breaking it down into simple terms. Let's begin with the basics, shall we? A bank, in its simplest form, is a secure place where you can store your hard-earned money. But it's more than just a glorified piggy bank. In return for storing your money, banks offer you a little something extra known as interest. This small percentage of your balance is how your money grows over time. But how do banks make money? Well, they lend your cash to others, such as home buyers or businesses looking to expand. They charge these borrowers a higher interest rate than they're giving you, and the difference, well, that's their profit. Essentially, banks are a safe place for your money to hang out and grow. They're like a money tree, where your savings sprout and bloom. Stay tuned as we delve deeper into this fascinating world of banking. Now, let's delve deeper and talk about something called fractional reserve banking. It may sound complicated, but it's actually quite simple. When you deposit money in a bank, the bank doesn't just tuck it away in a vault. Instead, it keeps only a fraction of it, say 10%, and lends out the rest. This is why it's called fractional reserve banking. The money that's lent out doesn't disappear, though. It gets spent and deposited back into banks, and then a fraction of that gets lent out again. This cycle can continue multiple times, effectively multiplying the original amount of money in the system. It's a clever way banks use to make more loans and generate more profit. But it also means that the money you see on your bank statement isn't all physically held by the bank at any given time. So while you might think your money is sitting in a vault, it's actually out there working hard. The banking system is like a web with money flowing from one bank to another. It's a bit like a relay race where the baton is the money and the runners are banks. Bank A might lend to Bank B, who in turn lends to Bank C, and so on. Each bank keeps a fraction of the money it receives as reserves and lends out the rest. This cycle of lending and borrowing is what keeps the money flowing through the system. But why would banks lend to each other? Well, sometimes a bank might need a bit more cash to meet its reserve requirements, or it might want to lend more to its customers, so it borrows from another bank that has surplus funds. This system of interbank lending doesn't just keep the money moving, it also facilitates economic growth. When banks lend, they enable businesses to invest and expand, and individuals to buy homes and cars. This system of interbank lending allows money to flow and the economy to grow. But who's overseeing all this? That would be the role of central banks. Like the conductor of a symphony, central banks guide the tempo of the banking system. They set the interest rates, which is the cost of borrowing money, and they can raise or lower these rates to keep the economy humming along at just the right speed. Too fast, and we risk inflation. Too slow, and we could slip into recession. But central banks don't just set the beat. They also step in when banks are in trouble. Think of them as the safety net of the banking system. If a bank is at risk of collapsing, the central bank can provide emergency loans to keep it afloat, preventing a domino effect that could lead to a financial crisis. So, the role of central banks, it's all about balance and stability. Central banks are the guardians of the banking system, stepping in to prevent financial disasters. When it comes to international transactions, banks use a system known as SWIFT. The Society for Worldwide Interbank Financial Telecommunication, or SWIFT, is a network that allows banks and other financial institutions to send and receive information about financial transactions in a secure, standardized environment. It's like the postal service of the banking world, but instead of delivering letters, it delivers secure financial messages. This system is crucial in our globalized world. Imagine you're in London and you want to send money to a friend in Sydney. Your bank uses the SWIFT network to send a message to your friend's bank in Australia, informing them of the incoming transfer. Once the Australian bank receives this message, they credit your friend's account, completing the transaction. It's a vast network connecting over 11,000 financial institutions in over 200 countries and territories. So whether you're sending money abroad or receiving it, it's likely going through the SWIFT network. In the digital age, banking has become incredibly convenient thanks to online banking and digital payments. This revolution started with the rise of the internet, and it's been gaining momentum ever since. Today, it's possible to do virtually all of your banking without ever stepping foot in a branch. Online banking allows you to check your balance, transfer funds, and pay bills from the comfort of your home or on the go. It's as simple as logging into your account on your bank's website or through their mobile app. And speaking of mobile apps, they have truly transformed the way we manage our money. From budgeting tools to instant notifications, they put complete control at our fingertips. But that's not all. The advent of digital wallets has made payments a breeze. Whether you're shopping online or in-store, you can pay with just a tap or a scan of your phone. With a few clicks or taps, you can manage your money from anywhere, anytime. So there you have it. A simplified explanation of how the global banking system works. We've journeyed from the basic concept of a bank, a place where money is stored and grows, to how banks generate income by lending your money at higher interest rates than they give you. We have delved into the fascinating world of fractional reserve banking, where banks keep only a fraction of your money and lend out the rest. We've navigated the complex web of the banking system, where money flows from one bank to another, promoting economic growth. We've also met the big players, the central banks, keeping the system stable and secure. We've explored international transactions through the SWIFT network and embraced the convenience of online banking and digital payments. If you found this video helpful, please give it a thumbs up and share it with others. Thanks for watching, and until next time, stay financially savvy.